Many are saying we are in the mother of all commodities bull markets, of all things physical. I was just talking to my friend the other day. He was at a VIP financial mastermind for that Tony Robbins put on, and there was a bunch of top billionaire investors there, Ray Dalio and Jeffrey Gundlach, and Larry Summers was there. Paul Tudor Jones was there, and he wanted me to go, and I got a little sick and I had a bunch going on, so I couldn't make it. And I was just talking to him yesterday or the day before, and he's like, well, it's a good thing you didn't go, because man, they were quite bearish. But geez, basically their only solution was commodities. And all these billionaires were saying the same thing. Obviously, on this channel, we've been talking about commodities for a while, but you're starting to see big money realizing that's where the money's going to be made. With everything. I mean, you're seeing wheat take off, nickel take off, gas take off, gold starting to take off, silver take off, uranium take off. All of these things, they're all facing incredible supply squeezes. So in today's video, we're going to break down some of those commodities, right? We're not going to talk about gold. We're not going to talk about silver. We're not going to talk about tech stocks. We're going to talk specifically about commodities. And my guest today has been studying this for a long time. You know, you're having these billionaires, like I said, starting to talk about it, but I can guarantee you they have not been studying it as long as today's guest has. Now, today's guest, my good friend, Steve Penny. He's the creator of the Silver Chartist newsletter. It's the best newsletter out there to break down everything that's happening and how to profit across the board from commodities, trading strategies, evaluating mining stocks, covering everything from copper, nickel, uranium, across the board. So we're going to be breaking down what are the most important commodities to look at and how to profit from those. Make sure you hit the like button on this video. Give us a comment right there down below for the good old-fashioned YouTube algorithm. My guest is Mr. Steve Penny from Silver Chartist. We'll link the newsletter right there down below. I'm a paying member myself. It's one of the best newsletters out there. It's been cool to watch because I said in recent video, I've had a lot of subscribers write me that have had tremendous success. I think one lady, I forget if it was 1 month or 2 months, but through following Steve's trading process, she was able to buy a new car. So you're seeing this incredible move. It's not good what's happening, but that doesn't mean we just need to sit there and wallow in our own misery. There are ways to profit off of this and ensure your own freedom. And more importantly, do it for the other people that don't have their head screwed on quite right, so you can protect your friends and your family and ensure your own freedom. So shout out to our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks. So thank you, Vizsla Silver, for being our sponsor. And right there down below is the link for Silver Chartist. Steve's got a bunch of great stuff coming up. They have an app that's coming out soon. Steve's been working on it for a while now. And so I want to let you know it's coming out here pretty soon. The price is going to be rising. Right now, the paid Silver Chartist is $9 a month. So a woman buys a car in exchange for $9. It's a pretty good trade. So I highly recommend you sign up before the price rises, and link down below. Steve, good to see you.
You too, Jake. Good to see you again. Thanks for inviting me back.
Steve, you've been talking about commodities for a while. What are the big ones you're focused on, and why are we in a commodities super cycle in the early stages?
Yeah, back all the way in 2019. It was late 2019 I first got on Twitter. And one of the first charts I was posting was the commodity index measured by the CRB index versus S&P 500, so versus general equities. And that ratio had never been so undervalued, going back at least 100 years anyway. Never is a long time. Let's say 100 years. So that was a generational opportunity where commodities have never been so undervalued relative to paper assets, specifically stocks. Now that ratio appears to have bottomed in March of 2020. And since then, commodities have been slowly outperforming general equities and stocks. Now, just because it's moved up a little bit, this is a multi-decade trend. And whenever something reverts so far away from the mean, it typically reverts back, not just to the mean, but overshoots in the opposite direction. So that begs the question, if commodities are undervalued, what are the most undervalued commodities? And for me, we talk about silver and gold a lot, but it's also copper, nickel, platinum, and uranium. Those are four other metals that I really like a lot, and happy to talk more about those with you.
All right. I know you got a couple charts you were going to show us. So why don't you pop them up?
Yeah, you bet. So why don't we start with uranium, if that works for you, Jake? I know you talk a lot about uranium on your channel. And
I'm all in on uranium, baby. I've been all in on uranium. It's an amazing story. And I mean, shoot, where can you find something that is as needed as it, that we need 200 million pounds, but we're mining like 120? I mean, I'm not the brightest math guy. I can't really pull out charts like this, but I can certainly do math. And that seems about to be like negative 80 million. I don't know if those are the exact numbers, but why don't you take us away?
Yeah. We're in a massive supply deficit, structural supply deficit, and the world is going to need a lot more uranium. And here's the crux of the matter is that, we need more uranium. For the first time in decades, many decades, both the left and the right ends of the political spectrum are embracing uranium as clean energy. It's carbon-free emissions, clean baseload power. So everyone agrees we need more nuclear. Most people do anyway. The problem is that the price has to rise in order to incentivize the new production that's going to be needed to meet this growing global demand. Nuclear reactors are coming online around the world, and it's a growth industry. The problem is the price has been so low because back in 2011, when we had that Fukushima disaster, the world swore off nuclear. So all the uranium mines shut down, and the price went down to like 17, 18 bucks a pound. Well, we need at least $65 a pound after the inflation we've seen to even break even across the board. That's generally speaking. And we're still down around $50 uranium. So that price is going to have to rise. I think it was Rick Rule who said, either the price of uranium rises or the lights go out. So that's kind of the backdrop, the fundamental situation we're in, which is just being exacerbated by what's going on around the world right now, where we're seeing the Nord Stream 2 deal shut down, and Russia's using its natural gas supplies kind of as Europe is heavily reliant on an unstable source of natural gas, which the natural reaction for these Europeans, especially Germany, is say, well, we need more nuclear, clean baseload power. So that's a fundamental backdrop for what's going on. And when we look at the chart here, you can see that the price bottomed in 2016, and we're rising right within this uptrend channel. And then we broke out convincingly last year and went up to $50.80. And I've been saying here on Twitter and to our paid members that once we break above this triangle pattern, $50.80 becomes the immediate target. And sure enough, once we broke above that, within a few days, we went up to $50.80. And here we are today, back at over $52 uranium. So from a chart-based perspective and a technical perspective, the next target is $73. Now, I realize a lot of people aren't into charts, and this may seem like pie in the sky stuff. Hey, I don't follow technicals. That's fine, but it's important to know the institutions, the trading algorithms, big money uses charts, and this is what they're seeing. So if you're not a chart person, it's important to know that the big money uses them. And from a technical perspective, 73 is the next chart-based target over the next few quarters. And just like in silver, there's a lot of money to be made between $50 and $73 uranium in these mining stocks because it's such a small sector. Last I checked, there was like 68 or 69 pure play uranium miners around the world, and they've got very small market caps. So when big money tries to flood in, there's just not space for them. So the share prices of those mining stocks really move fast. And the key is to be positioned ahead of time. And I think we're probably on the precipice of seeing the early stages of the next move higher in uranium. So this is a really exciting time for the uranium sector.
Yeah, it's going to be quite interesting to watch. So we got uranium here. What else do we have? You mentioned a couple other commodities.
Yeah, one that reminds me a lot of uranium a few years ago is platinum. And rather than show you an actual chart of platinum, I'm going to show you first a ratio chart of platinum versus gold. And basically the fundamental backdrop here of platinum. So I just told you guys, you knew this, Jake, but back in 2011, the world swore off uranium, which set the stage for this bull market we're in now. Well, back in 2014, platinum saw something very similar. Some of your listeners may remember the Dieselgate scandal. Well, platinum is its primary industrial use is in catalytic converters of diesel engines. And the world said, hey, we're not doing diesel engines anymore. so that caused the price of platinum to fall. Well, I think that's now more than priced in, and the bullish factors for platinum are being completely ignored. So number one, right now, the price of platinum is less than half the price of palladium. Palladium is used in catalytic converters of, regular gas engines. You can substitute that. So car manufacturers have to be looking at this and saying, well, I'm going to substitute platinum for palladium for half the price and save a bunch of money. That would be the logical response. And we're seeing signs of that happening right now. So that's number one. Number two, from a technical perspective, it's so undervalued. This is the kind of undervaluation you see once in a generation. Platinum is undervalued relative to almost every other metal that I can see. And, typically platinum trades at a premium to gold, to palladium, to a host of other things. And right now it's less than half the price of palladium and about half the price of gold. So this is an anomaly that we can use to our advantage. And another fundamental backdrop is hydrogen. Whether you like it or not, the world is starting to embrace hydrogen technology as a clean energy source. Big companies are starting to invest in it. And whenever you hear the word hydrogen or hydrogen fuel cell cars, think platinum, because there's a ton of demand for platinum with this technology. And that's something that's going to grow over the decades to come. So for me, platinum is dirt cheap right now. I consider it very speculative, but it's worth a speculative part of your portfolio. And not to give this too long of an answer here, Jake, but the next logical thing people want to know is, well, how do I invest in it? From my research, there's only a small handful of mining companies that are worth investing in. And probably the best and simplest way is just owning physical platinum or an ETF. But we do cover a couple of those mining stocks in the report. So hopefully that wasn't too long-winded of an answer, but that's my thoughts on platinum.
Yeah, amazing to see how undervalued that is. What else you got?
Sure, and we could also take a look at copper if you like. Copper has been on a tear lately. It's just breaking out to new all-time highs. But on a ratio basis, we're starting to get to that phase where if you measure things in dollars, it can kind of give you a false sense of what's overvalued and undervalued. You can say, oh, it's breaking out to new all-time highs. Well, almost everything is at new all-time highs. So on a ratio basis, copper is still relatively cheap especially compared to, paper assets and stocks and bonds and things like that. And, you were talking about in the beginning of this interview, Jake, we're not going to talk about tech stocks and everything. I may break that rule here just for a minute, because I was just talking to my friend the other day, and you can't, whenever you talk about investing with generalist people, they want to talk about Tesla and things like that. And I just asked them, whenever people talk about electric vehicles, there's no denying that Tesla is in a bubble. Some of those stocks are in a bubble territory. Well, we need copper and we need nickel. Those are my two favorite battery metals. So if you want to invest in the EV space, why not have some nickel stocks and some copper stocks? They have much more upside potential and much less downside risk compared to buying one of these EV stocks themselves. So that's my little spiel on EVs. If you want to play the EV sector, copper and nickel. And those are also headed for a major structural supply deficit over the next 10 years. And you can see we've been in a consolidation pattern here for about a year now, and we're just trying to break out above that now. And once we break out above this little resistance area, we could really see some nice moves up in copper.
Yeah, that's interesting. So you're saying generalist is focused on specific car companies, but you're saying the way to really get upside is to focus on what those electric vehicle companies need.
Exactly. And I won't give away the stock names out of respect for our premium members, but I like royalty and streaming companies. It's a lower risk way to play a sector, because I don't necessarily want to go build a whole separate portfolio with 20 copper stocks. With a royalty play, you can kind of get a lot of diversification in one name, in one stock. So we've got a couple of royalty plays in our portfolio that, you're diversified jurisdictionally, and you've got leverage to the potential upside of a lot of different copper mines across the world. And these are stocks I plan to hold for the next 10 plus years.
You were talking about nickel as well, which has made quite the headlines. Tell us a little bit about nickel, why you think that's another commodity to keep your eye on, and why you think it's something that can help someone greatly in this wealth transfer as paper assets are devalued and physical assets are increasing.
Yeah, and some of those stocks I mentioned there, I have one that's a pure play copper and nickel royalty play. And look at what's happened in nickel here. This is a weekly chart. So every candle here represents the week. Yeah. So it's still up 50% on the week. Last week, it was up 21%. But this week, and it's given back half its gains from the week. And this is, we're speaking here on a Tuesday, so we're only 2 days in. So this was up over 100% in 2 days after being up 20% the week before. This is what can happen to some of these small commodities. And, other people who were saying, I want to play EVs, the EV sector, they're looking at Tesla when I'm back here looking at, some of the copper and nickel stocks they haven't moved yet. There's not less downside risk. So, I mean, this is just an example of what can happen in some of these commodities and some of the individual stocks.
That's incredible.
Yeah, well, I'll see if I can show you one more. I don't invest in coal. I know you've had some guests on and that made me really think about coal, but honestly, being transparent, I missed the boat on that one. But coal a couple of weeks ago was up 75% in just the week alone. It looks like I lost the chart for that one, but
go ahead.
Oh, this all just serves to highlight, the inflation that we're starting to see, and this is going to go across supply chains. It's going to hit the grocery, our grocery bills, and unfortunately, this isn't we're closer to the beginning of this than the end. It's not going to go in a straight line, but we're going to see this gradual trend of higher and higher prices and higher.
Why are we closer to the beginning than the end?
Well, because the Fed is facing a key inflection point. And this applies to central banks around the world, but the Fed is the main one, where they're going to have to choose between sacrificing the economy or sacrificing their currency, in this case, the dollar. Because if they raise rates and fight this inflation by tightening policy, it's going to crush an already fragile economy. The global economy is so fragile right now. And if they raise interest rates, it's just going to crush it. And if they do that, who's going to get the blame? The politicians who are enacting these policies. Where if they opt for inflation, they can blame Russia, they can blame the corporations for charging too much. People don't understand, and all the blame gets deflected away. And we have historical precedent going back a long time that shows politicians always choose to inflate away their currency in times like this because people don't understand it. They don't understand inflation. They get mad at each other instead of getting mad at the people who brought us this.
So, in essence, what you're saying is the best way to play the, whether it's the electric vehicle or the clean energy movement, is to focus on the minerals and molecules that are essential behind the big brands.
Yep. I think that molecule shortage quote that you mentioned earlier was really accurate. And, some people, maybe you don't have a lot of disposable money to go invest in these things. Maybe you got $50. Well, one thing, for just a simple thing, is you can start buying stuff in advance. Personally, I'm trying to buy my groceries, things that I can put in a freezer and that don't have a long shelf life. I'm going to buy that stuff 6, 7, 8, 9 months out, even further if I can. It's only going to be more expensive a year from now. You can buy some chicken and throw it in your freezer. I can almost guarantee that it's going to be more expensive a year from now than it is now. So that's an investment. You're preserving your purchasing power.
Where do you think it goes from here?
Unfortunately, I think we're going to see a lot more civil unrest. A lot of people remember the riots around the political stuff in the United States, also the racial tensions, things like that. People get mad at each other in these when this stuff happens. They blame all the wrong people, and tensions that normally aren't there just rise, and people get mad. So I think civil unrest is probably going to increase. That's very sad, but I think it's an unfortunate reality. So, one way to mitigate that is where you live, things like that. We're trying to be strategic about where we move next. I know you're doing the same thing, Jake. But
so we wanted to do a quick masterclass breakdown on some areas you can focus on in the commodities cycle. Commodities cycle has the opportunity to make people very rich. And it is the unfortunate consequence of not only the incredible amount of money that's been printed, but the lack of investment that's happened in the minerals and metals that are behind everything, right?
Yeah, 100%. So it's not just a monetary phenomenon. That's part of it. But we're also seeing supply chain disruptions, which means fewer goods. So when you have fewer goods in the economy and that and then more currency that they're creating. You've got more currency chasing fewer goods. That just exacerbates the problem. And what's happening geopolitically as well, like Ukraine is, they produce a tremendous amount of wheat, tremendous amount of corn, a tremendous amount of neon. I'm not a neon expert, but I'm just learning about this recently. That's necessary for, lasers and high-tech kind of military things.
Raves.
So, yeah, these are just other supply chain potential problems that are going to flow, kind of like dominoes through the whole global economy.
Look, I made my New Year's resolution to focus on what I can control and do the absolute best I can. And that's why we put this together. It's why I put this channel together. I really put it together for myself because I recognize we're in very strange times, and I needed to focus the best I could to prepare myself, make the most of my capital, and do the best I could to multiply my capital, not so I could have an extra pair of shoes, but so that I have freedom. And history tells us that during these cycles, they're not good social times. And there's two ways you can look at this. One is you can get really upset and you can focus on a lot of things you can't control. A very small percentage of people will focus on what they can control, and they're going to make a lot of money. And I encourage you to be one of those people. Steve is a great guide and way shower for that. The Silver Chartist newsletter is one of the best ones out there to help you do that, breaking down mining stocks. If you want to learn more about the ways you can participate in this commodities super cycle, you want to learn more about ways you can make money in uranium, nickel, copper, platinum, and all the various commodities that are outside of the scope of gold and silver. I highly recommend you sign up to the Silver Chartist newsletter. Price is going to be going up here very soon because an awesome new app is coming out. So right there down below in the comments, you can go ahead and you can sign up. It's pinned to the comments. It's in the description right there down below. Let us know in the comments what you think about today's video on this short masterclass on ways you can make the most of this commodity super cycle. Make sure you hit the like button on this video. I want to thank you for watching, subscribe, bell notification, all that good stuff. A lot of people commenting that they are not getting notified for new videos. So make sure you hit that bell notification. Toss it over to you, Steve. Did I miss anything?
No, I think that was a great summary of everything we talked about, and really appreciate you inviting me on. And I love your audience too, by the way. I've met some of them in person. I've met a couple of people like, hey, I've seen you on the Jake Ducey show. So I just feel a really nice connection with your audience, and grateful to be able to come on to speak with you and on a regular basis.
Absolutely. I'm glad you put the service together. So everyone, check out Silver Chartist right there down below. Have an absolutely great day. Let us know in the comments what you think of today's video, if you got value from it, and we will see you next time.